Are ETFs the right choice for marijuana stock investors? What to look for when searching for a cannabis ETF pot stock to watch. Cannabis-based ETFs have surged in popularity amongst marijuana stock investors over the past few years. Because individual pot stocks can be very volatile, investors often flock to ETFs as a way to curb potential spikes and drops in prices. In addition to this, individual marijuana stocks to watch can often have their own troubles. This could be anything from scandals to bad earnings and more. Because of that, pot stocks can very quickly move up or down in price. This is not to say that volatility is a bad thing. Rather, it may just not be the thing certain cannabis investors are looking for. On the other hand, ETFs offer similar exposure to the cannabis industry without the threat of massive volatility. Back in 2019, the SEC in the US approved several marijuana ETFs for trading in the country. Since that time, they have become very popular among the whole spectrum of cannabis industry investors. Certain ETF marijuana stocks can have more risk than others. Within the world of ETFs, there is what is known as active and passive exchange traded funds. They are pretty much what they sound like, but for those who don't know, a passive ETF is a fund that manages the same pot stocks through and through. This means that the companies within the ETF are not changing on a day-to-day basis. Rather, they are updated on a quarterly time period. An active ETF is one where the underlying assets can change based on the performance of individual marijuana stocks. These ETFs can both hold popular pot stocks like Canopy Growth Corp and Euphoria Inc. When searching for the right ETF pot stock to watch, investors should make sure they know what the underlying companies are. Are these strategies to utilize when investing in marijuana ETFs? One of the trickiest things about an ETF is, again, the underlying assets. Some marijuana stocks can have a very low amount of liquidity. This means that they can jump or fall in the high double-digit percentage range. The volatility is often heavily reflected in the ETF's price. In addition to this, the SEC has made it very challenging for US-based pot stocks to get in on the ETF action. This means that the most popular ETFs will be filled with Canadian marijuana stocks. This is due to legislation surrounding cannabis on a nationwide level in the US. This is not to say that Canadian pot stocks are a bad thing, but rather investors should simply know what they are investing in. If regulations change, this will likely change as well. But for now, things seem quite stagnant on this front. ETFs are a great way to gain a lot of exposure to the cannabis industry, while not having the risk of high volatility. For all types of investors, ETF pot stocks can be a solid place to start or end your journey in the world of marijuana stocks.